I want to move on here to ESG because Armando's very involved in this as well. Environmental, social, and governance. You know all about this. ETFs that trade around these factors are really hot right now, but do investors really know what they're owning? It's a broad term, but it generally means finding companies that meet positive standards of corporate responsibility. That's my definition, at least. But that's not the only definition, so let's discuss that. So you have one here. It's the SUSL. I forgot the symbol. iShares ESG leaders. And there are certain standards that are met here in environmental, social, and governance. But here's what's interesting about this. The biggest holdings are Microsoft, Alphabet, Johnson & Johnson, P&G, and Visa. This is like high-quality, big-cap stocks. And an average person might look at this and say, good heavens, I own Microsoft. I'm ESG. Isn't that great? I'm socially responsible. And yet, when you see this, what is it that makes, for example, a Microsoft and an Alphabet really high on the list of socially responsible companies at this point? How do you determine that?
So, Bob, what I would say there is, when we think of sustainable and ESG, we tend to have ESG, the core of the ESG portfolio, tracking the index, closely tracking the index, and we're just optimizing for ESG factors. You're talking about the MSCI Leaders Fund, which is the large cap, mid cap. On that, we have higher tracking against the index, but a higher, if you want, sustainable scoring for the portfolio. And the final way in which you can invest in sustainable or ESG is when you try to go after a specific theme, a low carbon fund or a green bond. Those are the three ways.
I guess a larger point here, people are very cynical and they say, oh, this is great, I own Microsoft, you know, I'm ESG, I'm socially responsible. My answer to that is, and one of the reasons I support this concept is, the game here is to push these companies towards recognizing what better forms of social responsibility and give those that are doing it higher levels. So you might think, oh, ESG, you've got to be beyond meat. You've got to be a vegan fund or something like that, but you don't. The point is, if companies are exhibiting higher levels of more social responsibility as corporations, they get a higher weighting, even if it's Microsoft and you don't think of them as, necessarily, you know,
Bob, there's
ESG.
three parts to ESG, though. I mean, I think E gets most of the media attention, but sustainability and governance are critically important to investors. So when you think about ESG companies like a Microsoft, you know, you've got best practices, you've got Class A management and board structure and transparency, and more importantly, also, how are you treating your employees? That's a big factor of ESG, and the social awareness and being able to make your employees happy makes your clients happy, which makes for a better company.
And I want to bring up a very specific company, WeWorks, and we were talking about this before. If you look at the company, one of the reasons the company has gotten a lot of criticism is it frankly violates a lot of ESG principles. The voting class shares that are involved, some of the alleged behaviors of the high-ranking executives that are in it. Those are actually ESG questions here. Leadership, pay, shareholder rights, customers and stakeholders. Those are ESG questions. So in a way, a lot of the WeWorks debate was around what we call ESG issues, which is one of the reasons, again, I support the concept. Armando, before we let you go, what I find interesting here is a lot of interest in Europe, a lot of interest in Australia, and yet the money coming in is still pretty modest. How do you reconcile the fact that we're all talking about being more responsible, millennials love it, and yet the funds coming in are not Titanic? Is that going to change, or explain that to me?
It has been changing, and I think that you're absolutely right. It started a lot stronger in Europe, but the speed is catching up here in the US as well. SUSL that you mentioned, that's been the largest ETF offering in 15 years. We raised $850 million. So the money's coming in and the speed is catching up here in the US as well.
20 seconds, the last question here. I always ask ETF leaders like yourself, ETF business is constantly under attack by the old guard, by the old active management that have not done very well in the last few years, that somehow there's something structurally unsound about ETFs. Too many people are investing in it. Passive investing is a bad idea. It's going to blow up eventually. Every time people say this, I say, you mean like December? We had a lousy December and the ETF structure was strong. What do you say to people who say there's something wrong with ETFs, there's something wrong with passive investing in general?
Bob, you've been doing this for over 20 years. I think that pretty much everybody here in the table, we've seen different market environments. You mentioned December, full-on correction. ETFs provided liquidity, price discovery, and stability. So again, you know, we can go back 40 years. stability, liquidity, and stability.
Yeah, I think that's the right answer. Gentlemen, we're going to have to leave it there. We can go on for a long time about this, but let's leave it right there. And thank you. Great job, Armando.